Well, Dan, tell us about Redcape.
Well, Redcape's a community pub group. We have around 34 pubs through Queensland and New South Wales. We've got 2 more coming on in the next couple of months. We are a pub operator, community pub operator, but we also own our property. And that's a key differentiator in the marketplace, in that we both run the businesses, but we also own our property. So we've got the full flexibility of having the full operations and property backing.
You use the term community pubs, and people would be surprised that you would use that word. And it has been something that's crept into the pub scene probably over the last 10 or 12 years. Tell us why you say community pubs.
Well, I think it goes back a long way. You know, pubs have been around for hundreds of years, and
It used to be discriminatory once upon a time. The women were thrown in like a special area, weren't they, in the old days?
I think there's been a lot of sordid events going on in pubs over the years, but I think also what happened with pubs over decades was generally where people like the mayor of country towns came out of the pubs, and the sort of leadership positions in communities came out of the pubs.
Yeah, and key meetings were held in pubs.
Absolutely, and it's that point of connection, and certainly coming out of a COVID period where we saw a huge amount of reconnection with people and communities coming together, localism coming together. That sits right in the socket of Redcape's pubs. We're in the suburbs, we're in those community hubs in highly populous areas, and that's really why we talk about community in that leadership position.
It's funny you should say that, because many years ago, and I can't remember the guy's name, you might recall him, he was the chair of MacArthur Mining, and he died in a plane accident with half his board. But he owned a lot of pubs in Brisbane, and his idea was, well, here are pubs doing nothing by day. Why don't we put cafe bars in and play areas so mums can bring their kids to pubs? Now, that was probably 10 years ago, and I know a lot of smart pubs are doing that kind of thing nowadays, using their facilities much more effectively.
Yeah, look, I think that what we know about our customer base, and we've got around 200,000 people across our network that are digitally connected to our pubs, our customers, is that it's the preferred form of entertainment for them. Food and beverage, gaming, retail, liquor, accommodation. These are the sorts of things that community pubs stand for. And certainly for us, we've got this wonderful public communities platform, which allows us to have our digital customers have every one of their transactions in one of our pubs attract community pledge points, and we'll match those pledge points, and digitally in an automated way customers can nominate those community groups that attract the pledge points, that attract the dollars.
Why did you call it Redcape?
Well, I didn't firstly, but
and then Queensland is the home of the Reds.
That's right. Well, I think it's got two origins. One is Redcape, as in Superman.
Oh, yeah.
Yeah, and the other one is in the Queensland, the Cape. And once upon a time, we had a lot of pubs up in the Cape.
Okay.
And so this pub portfolio, I've been around the portfolio for 16 years, has been as many as 100 odd pubs, as little as 20. And where we are today, we're 34 and soon to be 36. So it's really about, over that time, it's been the deployment of capital, making sure that we can add value to hotels. Once we've added value to hotels, to divest those, and then go and find other opportunities to be accretive with our growth capital.
I know that you've got a growth strategy, which we'll talk about in a second, but how it must have been tough over 2021, the coronavirus basically, and the restrictions stopping people from actually using your facilities.
Yeah, look, we went into shutdown, and the tourism and hospitality sector, right across the sector, has really been at the worn the brunt of this. I think one of the things that we did early on was for our security holders, we took the responsible step of stopping our distributions. We pay quarterly distributions. We stopped our distributions. We went to our banks. We got the right conditions around our debt to see us through what was an unknown time. And then we kept all our staff stood up. We then connected with our customers and kept our digital customers connected to the venues, even though they weren't attending the venues.
Right.
And we then went on a learning journey with our customers. We went to the 200,000 of them, asked them who wanted to be part of a panel. Within 24 hours, we had 1,500 customers that offered themselves to answer questions, all the unknowns. So myself and my management team were able to ask questions right throughout the period as to what they were sensing, how they were feeling, what they were missing in terms of their pubs. So when we reopened, we could pivot the business and ensure that we hit right on those customer values that were changing throughout that COVID period.
So I guess the big question out of that is, what kind of capacity are you at? Like, you went down to probably zero at one stage, and it's progressively getting better as restrictions taken away. Where are you now, right across your portfolio?
Well, look, firstly, we took the humble position throughout that period to say we didn't have any customers because there wasn't any coming in. We had to win them back. As we stand today, we've still got restrictions in and around on our indoor spaces and our food and beverage spaces. We did see throughout the period, though, our ability to change our spaces, and that comes very much down to the fact we own our property and we're able to do lots of building works and those sorts of things throughout the shutdown period to better accommodate social distancing and ensure that on the open up that we were well equipped to handle the changing customer preferences. We're not at full capacity yet, but I think certainly in New South Wales, where it stands today, we're imminently getting back to full capacity.
Okay, so you recently posted the first half record, which shows that Redcape to be a pretty resilient business. So what are the metrics that indicate strength and resilience for the group?
Well, one of the things we firmly believe in is our three metrics for success. We have 2 lead indicators and 1 lag indicator. Staff satisfaction is a lead indicator, customer NPS is a lead indicator, and our distributable earnings is our lag indicator. So our value chain in the hotels, which stands to reason for anyone that's been in a pub, if you've got happy, engaged staff, generally the customers are happy and engaged.
Yeah, it's a momentum thing, isn't it?
That's right, and then the earnings follow. But what that allows us to do is be very proactive, that if we see one of those lead metrics start to falter or catch a flu, we can jump in the ambulance and get straight out to that venue and ensure that, if it's a customer issue that we're dealing with it, if it's a staff issue, we're dealing with it, and it smooths out the earnings and the predictability of the earnings.
I guess there aren't many sort of individual pubs that can get that kind of objective observations unless they really try hard to get their customers to talk to them truthfully about what's going on.
Well, that's what the great thing of a digital platform does, right? It becomes that sort of peer-to-peer discussion that if you speed that up quicker and quicker, have the real conversations with your customers, respond to what they're actually saying to you.
Yeah, particularly after 10 o'clock at night when they're more inclined to tell you the truth.
Yeah, that's right. And really then go and make those changes that improve the experience. That's how we see our earnings improve, our staff satisfaction improve, and our customer NPS improve.
Okay, so you've had a strong first half and a rebound from the challenges of the COVID period. So what learnings have you implemented across the business to continue basically this momentum you're seeing?
Well, one of the things that this business over a number of years, it's been in customer retention. We haven't really been out there with our efforts acquiring new customers. Through COVID, what we did do, as I said through that panel, was we asked questions around what our customers really valued. And there was 2 things. There was the sense of affiliation and wanting to belong to the community.
Mm.
The other thing was in around having positive social impact in their communities.
Mm.
And so that's where we've pointed our resources. And going forward, what we're doing is we're winning market share. We're in a customer acquisition mode now, which we haven't targeted or resourced for many years, but now we're in that zone.
And the coronavirus didn't make you feel confident enough to get out there and really spend big time. A lot of CFOs and CEOs had to basically, batten down the hatches until they saw the blue light coming through the dark shutters.
Look, we took a calm and deliberate approach through it all. Deal with our, turn the distributions off, deal with our debt, keep our staff stood up, keep connected to our customers. Then when we reopened, it was really about turning the distribution back on to our security holders as a first order of business. And we're able to do that in the first quarter. We also have been able to, throughout that period, expand our debt facilities, increase our tenor out to 4.1 years. We've also, through that period, made 4 acquisitions. So we really have been on the front end of the wave here.
I guess it's been a good time to pick up some good quality assets at better prices than you would have seen before the coronavirus.
There was some opportunities in the marketplace that we stayed close to. And we felt confident in that because we kept connected to our staff. And our value chain here is that when we reopened, we've been able to increase our staff satisfaction as a group, our customer NPS, and that has continued right through to now where we're at record levels, even beyond the half year. And that gave us confidence to be able to go out and make those acquisitions. And to the point now in this half year where we've also given guidance. So we're sure enough around about our performance that we've given out a full year at 9.7 cents per security.
Well, Dan, before the interview, I had a look at your stock price chart, and you're not back to where you were before the coronavirus, but you're not back to full operation like you were beforehand. But it's been a nice rise out of the coronavirus crash, hasn't it?
Well, look,
because you're not responsible for stock prices, but it's good to see the market is actually perceiving that you're heading in the right direction.
Look, our stock price was at net asset value when coronavirus hit. We're operating at about a 20% discount right now, and obviously that's a lot better than where it actually crashed to. And I think I understand that people still have some reservation in the area around the fact that there's still some volatility around businesses shutting down, governments still making those decisions. But as we come out, I would expect that we will return to our net asset value precisely where we were beforehand.
Given the fact you're in Queensland and New South Wales, so I would have thought then, because of the relative success of beating or containing the coronavirus, that augurs well for the business going forward.
Look, we've been thankful to be in those 2 jurisdictions. I mean, predominantly the governments in those jurisdictions have had a predisposition to want to keep business open. So even when necessities are seen to shut down, there's always been a pathway to reopen. And that's, that's just been actually terrific for us in business to be able to plan to that and talk to our customers and our staff through that.
So given where you are now and the fact that vaccinations are now starting to ramp up, probably not as fast as we all would like, but they still are coming on. When do you think Redcape will be back to full throttle with 2 new businesses on board? Or more? Yeah,
we've got 2 new businesses. We've just recently settled 2 businesses, and we've got 2 new businesses coming on in the next months coming. Look, our strategy, we're back to full throttle on a strategy basis. From a restrictions perspective, we expect the cost base still to be high through the rest of this year. We expect it, and we're forecasting it to be in next year. As far as restrictions are concerned, we expect those to lift more liberally and gradually throughout the remainder of the year, albeit that we've kept a conservative view on on our forecast. That 9.7 cents per security assumes that higher cost base, and it assumes current trading restrictions.
Yeah, okay. And so looking at the whole landscape going forward, you know, is this a company that's going to be acquiring a lot more hotels over the next 3 to 4 years, do you think?
Our growth strategy sits around both being able to optimise the businesses we're in, add value to the businesses we're in, application of growth capital. So we're retaining earnings. We've got a 75% payout ratio, which means we're holding back capital to deploy into renovations and those sorts of things that can supercharge growth. And then as our either debt facilities, we've got headroom there. We've also got optimism that we'll get our share price back to a level around NAV, which may mean we can raise some equity to grow more. The platform was built for scale, but you know, it's all about adding value to assets. It's not a roll-up. It's not just out there acquiring. We need to make sure that we're using our capital in a disciplined fashion.
And finally, we saw that the federal government has pumped a bit over $1 billion towards the tourism sector. Are any of your pubs going to be advantaged by that spend?
Oh, look, I think the government stimulus programs, whether it be JobKeeper or this, have all been geared generally to the benefit of the economy, and the tourism and hospitality sector needs that sort of support. So we would see that we'll certainly be the beneficiaries of that, like we were with JobKeeper. And I think that all the support we're getting from government is warranted. The hospitality and tourism sector has copped it head on. Fortunately in Redcape we don't have landlords. We've got strong balance sheet and those sorts of things, so we can withstand these sorts of pressures. However, it is something that government supporting us is a very welcome thing.
Okay, Dan, good luck with it.
Thanks so much.
That's Dan Brady, CEO of Redcape.